Hi, Ron Benning, eXp Realty, SacramentoInvestor.com, and StocktonInvestor.com. Today I want to talk a little bit about the 5+ unit market in the greater Sacramento area. Pretty much the bottom line is of all the market segments right now, I see this as having the best potential for getting a good deal right now. I guess it always comes down to risk versus reward. This is a market segment where maybe there's a little bit more risk right now with all that's going on, but maybe less than people would think. So let's take a look at some of the facts on the ground. Probably the most important thing that you need to think about with regard to the 5+ unit market segment that I'm talking about. This is commercial financing. And due to COVID-19, a lot of the banks are requiring reserves of 12 to 18 months. Now that can be a challenge for a lot of people. What we've been finding is that about 5% of the tenants out there aren't paying. Probably the tenants that aren't paying the most are tenants in situations where they're not entry-level housing. A lot of the entry-level housing tenants actually are making the same amount of money or more. And what we have been finding, and you should do your own independent research, is across the board, it's only about 5% of the tenants that aren't paying rent. Let's take a look at some statistics here. The 5+ unit market, and let me get very specific when I'm defining a market for you. I am defining a market of 5 or more units that are active in the MLS. And because of the size of the market, we're looking at the 9 counties in the Metroless MLS system. My GRM reports will correspond with this report. So let's look at the numbers. At the end of July, there were 49 multifamily properties, 5 or more units on the market in the MLS in the 9-county Metroless service area. If you take a look at the chart on my right, you're going to see for the last few months, there's only been about 2 sales per month. One of the things I talked about last month was the amount of inventory that had started to stack up. If you take a look at the month's inventory chart, just to the right, you're going to see that we're definitely in a buyer's market for this kind of property. One of the things I talked about last month is targeting properties with a reasonable cap rate and then going in at about 10% under the asking price. This is a strategy that one of my investors had followed. If you look at the most recent number for pending sales off to the right, you're going to see that there's actually 10 of these buildings pending now. This hasn't translated into closed sales yet. One of those 10s is one of my clients who we went in at about 10% under the ask on one of the properties that had been on the market for a while, and we had our offer accepted. One of the things that I really think creates one of the biggest opportunities is understanding how these properties are marketed. And they're not marketed well in most cases. So what we're really looking for is the way that they are being marketed. A lot of them are being marketed, if they're a bigger building, in CoStar or LoopNet. The ones that I'm really talking about here are the ones that are in the MLS, because there's one of the things that I have found about 5 or more unit buildings is that a lot of the search criteria that people are using, if you put in Sacramento, for example, it's not going to pull up Citrus Heights property. It's not going to pull up Fair Oaks property. And what I am finding is that in the 5 or more unit buildings is that people should be searching by county, and they don't. And so what I like to do is I like to target properties in the sub-markets. For example, one of them that we have in escrow is in El Dorado County. And if you look at the small sub-markets there, people are just, they're flying beneath the radar because people don't search Placerville or Pollock Pines or Kings Beach. And the way that the searches work on LoopNet and CoStar, unless people do a county search, a lot of these sub-markets are just going to fly underneath the radar. A few minutes ago, I talked a little bit about the reserve requirements being greater than normal. A lot of my clients are saying, what kind of interest rate can I expect in this commercial loan? Right now, I did a little bit of investigation over the last few days, and I'm seeing rates between three and three quarters and 4.25 with a 10-year fixed being out there. It really pays to shop, and you need to understand the yield maintenance. We can talk more about that offline if you have questions about that, and the reserve requirements. So what I'm really suggesting in this particular niche is to look for properties that have been on the market for 60 days or more, that have a reasonable cap rate based on the pro forma cap rate numbers that you can get off my 5+ unit charts, within striking distance of being where we would want them to be, going in about 10% under the ask. When you look at the amount of these properties that are on the market compared to the amount that are selling, some of these sellers are going to blink. And if you look at another chart off to the right, and this is the average sale price compared to original list price, you will see that in the last year, at the very low end, there was a month where they were selling for 81% of the original ask. Last month it was 94. But that magic number is somewhere in there where I'm thinking if it's been out there on the market a while, we go in about 10% under. I know this 5 or more unit strategy isn't for everybody, but sometimes the greatest reward comes with a little bit more risk. If you have any more questions, you can look over to the side and you'll see my phone number or Sean Milam's phone number. We'd both be happy to help you. We look forward to helping you buy your next 5 or more unit investment property.